Wall Street's main indexes closed slightly lower after the US inflation reading came in hotter than expected, while many investors stuck to the sidelines ahead of the AI bellwether Nvidia's earnings later. Now, as per a report showed, an annual US inflation increased 3.7% in the 12 months through July. Separate data showed the economy grew at 1.5% in the second quarter. Take a look.
Wall Street's main indexes closed slightly lower on Wednesday, with the Dow dropping about 0.2%, the S&P 500 little changed, and the Nasdaq nudging down marginally. A Commerce Department report showed annual U.S. inflation increased 3.7% through July, a touch above expectations. The latest print added another wrinkle to the Federal Reserve's policy outlook, potentially raising the stakes for Fed Chair Kevin Warsh's speech Friday at the central bank's annual Jackson Hole Summit. Megan Horniman is Chief Investment Officer at Verdance Capital Advisors.
They should have raised interest rates a long time ago, at least 25 basis points with a hawkish tone. They can't wait till October. They can't wait till December. My biggest concern about the Fed is that they lose credibility with especially the long end of the Treasury curve. And that can have a lot of different ramifications on economic growth than just raising interest rates 25 basis points.
Meanwhile, investors were laser focused on earnings from Nvidia after the bell. Shares of the AI chip giant, down at the close, slid further in extended trading before flipping into positive territory. Nvidia's quarterly revenue more than doubled, and the chip maker forecast third-quarter revenue above Wall Street estimates, signaling that demand for its AI chips was still strong. Elsewhere in the market, shares of Moderna fell nearly 6% after strong gains on Tuesday, although the stock remained well above its trading levels before the company disclosed encouraging vaccine data last week, alongside Merck. And shares of J.M. Smucker gained more than 4% after the Folgers coffee maker forecast a smaller-than-expected decline in annual sales.
Nvidia's quarterly revenue more than doubled, while its third-quarter forecast beat Wall Street estimates. The results signal strong demand for AI chips, suggesting that AI boom still has further to run.
AI has been going gangbusters for years, and the big question is, can it continue? Nvidia is the main designer of AI chips, so it doesn't make them itself. There's a company in Taiwan called TSMC that does most of that. But you can say that pretty much all the demand for AI gets funneled through chips, and most of those chips are from Nvidia. So as goes Nvidia, so goes the AI wave. What we're seeing is that the AI economy, all this huge growth of the AI infrastructure is continuing, and that Nvidia managed to beat expectations in the quarter that it just reported on, and that it expects to beat expectations in the quarter that's coming. But gross margins are going down a little bit in the quarter that's happening right now to 74% from 75%. And for the most expensive company in the world, one worth more than $5 trillion, any little deterioration like that can mean a lot to investors. These results, beating expectations, show that there's a lot that's still going on here. It's going to keep on lifting the AI software companies like OpenAI and Anthropic. It's going to support the data center builders, and it's going to support this huge ecosystem of companies that are building the data centers and that are relying on them for jobs. And that's a lot of the United States. Nvidia is the bellwether for the AI wave, and that is hugely important for the market. You've got AI companies, tech companies, companies that are just using AI, all focused on whether Nvidia is going to see the demand continue, which would support lots and lots of stocks.